OPEC just made a bold move that's throwing America's energy strategy off balance. For a while, it seemed like the US had things under control. Domestic oil production was booming, LNG exports were on the rise, and Washington was making a clear statement. We don't need you anymore. But OPEC had other plans. They tightened their grip on global supply, raised prices on their terms, and reminded the US who still calls the shots in the oil world. This isn't just about oil prices, it's a power struggle and it's about to get serious. But before we dive into how this battle unfolds, take a second to like and share this video to help us reach more people who care about global economics and energy politics. OPEC's latest move isn't just a knee-jerk reaction, it's a calculated response to a long-building challenge. For years, US shale oil flooded the market, undercutting OPEC's dominance and threatening their market share. American energy exports to key regions like Europe and India started eating into OPEC's traditional turf. In response, OPEC struck back with surgical precision, cut production, controlled the market, and pushed prices higher. Their goal? Reclaim the driver's seat and remind the world that OPEC still holds a central role in the global energy market. Under Trump's energy policies, the US didn't just focus on drilling, it aimed to redefine its global energy position. Federal lands were opened up for extraction, production hit record highs, and for a while, it seemed like the US was on the brink of true energy independence. The result? US exports surged, oil prices dropped, and OPEC's influence took a hit. But there is a catch. Boosting production is one thing, controlling the global market is another. And now, with OPEC hitting back harder than ever, the limits of the US strategy are starting to show. OPEC isn't a monolithic entity, it's a coalition of countries with different priorities, and the rivalry between Saudi Arabia and Iran is the most complicated of all. However, for now, there is an uneasy truce. Both countries see a common enemy in US energy dominance. Iran has called for OPEC to unite against US sanctions, while Saudi Arabia is using its production power to control prices. This temporary alignment makes OPEC's actions even more effective. The moment OPEC made its move, the markets felt it. Oil prices shot up quickly, leaving traders scrambling to adjust. It's not just crude oil prices that are affected. Energy stocks are moving, currencies tied to oil exports are fluctuating, and investors are watching every signal from Washington and Riyadh. For now, the market remains tense. The longer this standoff continues, the higher the risk of more price spikes and economic shocks. And while we are discussing economic shocks, drop a comment below. How do you see this energy battle playing out? Will OPEC keep its grip, or will the US find a way to counter? The US produces a lot of oil, but here is the issue. Not all crude oil is the same. American shale oil is light and sweet, but many US refineries are built to process heavier crude, which many comes from OPEC countries. When OPEC cuts supply, these refineries can't simply switch to local oil without expensive upgrades. That leaves the US with two costly choices: pay more to import alternative sources or cut back production. So while the US has made major strides toward energy independence, it's not quite there yet, and OPEC knows it. At this point, the US has two options: diplomacy or counter-strike. Diplomatic talks might ease tensions, but convincing OPEC to cooperate isn't easy. Every member nation has its own agenda, and negotiating with a divided group is like herding cats. The alternative? Retaliation. Flood the market with US oil, drive prices down, and pressure OPEC to react. Sounds bold, but it's risky. One wrong move could backfire, sending prices even higher. Right now, US leaders are weighing their next steps carefully, knowing that there is little room for errors. This isn't just a US OPEC issue, it's affecting economies worldwide. Major oil importing nations like India, China, and Europe are watching closely. If this standoff drags on, rising costs and potential supply shortages could hit hard. Some countries are already adapting. India is securing LNG deals with the US to reduce reliance on OPEC. Europe is doubling down on renewables, hoping to insulate itself from oil price shocks. The world is shifting, and those who adapt quickly will come out ahead. Not everyone is struggling in this standoff. Some nations are quietly winning big, especially Russia and Iran. As the US and OPEC wrestle for control, these players are stepping in to fill the supply gaps, striking energy deals in Asia and the Middle East. Meanwhile, smaller energy-producing nations like Malaysia and Vietnam are positioning themselves as regional trade hubs. In every crisis, someone gains ground. Right now, the fastest movers are locking in deals that could reshape energy markets for years to come. This isn't just global politics, it's hitting your wallet. Gas prices are rising. Heating costs could be next, and higher transportation expenses are affecting groceries, delivery fees, and retail. In some regions, even electricity rates are linked to oil prices, meaning unexpected spikes could hit households hard. How long will this last? That depends on what happens next. If instability continues, these price hikes aren't going anyway anytime soon. OPEC isn't thinking about the next few months. They are playing the long game. Their strategy is simple: control supply, maintain their market share, and ensure the world remains dependent on them. Countries like Saudi Arabia and Iraq are expanding production capacity while carefully managing exports to maintain leverage. Meanwhile, the US is caught between short-term production boosts and long-term energy transitions. Some argue for doubling down on domestic oil, while others push for renewables. The problem? Neither option is a quick fix. Whenever oil prices surge, renewables gain attention, but the global economy still runs on oil and transitioning takes time. Countries like China are aggressively investing in clean energy while maintaining fossil fuel reserves to avoid shocks. The US is also diversifying its energy mix, but for now, oil remains a crucial part of the equation. Markets are on edge. If OPEC holds its position, oil prices will remain high. If the US makes an aggressive move, it could trigger unexpected shifts. Meanwhile, sanctions on Russian oil continue to add uncertainty. Several scenarios could unfold: a prolonged standoff, a temporary truce through diplomacy, or a market reshuffle where energy diversification reduces OPEC's long-term influence. So what do you think? Will OPEC hold its ground, or will the US find a way to counter? Drop your thoughts in the comments. And if you find this breakdown valuable, don't forget to like, subscribe, and hit that notification bell. Thanks for watching. See you in the next one.